Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about the home builders and what's going on in the new home sales market. First, I want to thank our sponsor, Optimal Blue, for making this episode possible. Logan, welcome back to the podcast.
It is wonderful to be here, and we're going to talk about the home builders just by themselves. And the reason I bring this up is because as the 10-year yield has been going lower, mortgage rates have been going lower, the builder stocks are doing better. But, with all these negative headlines about the builders, what's going on?
Yeah, this is so fascinating because obviously they, over the last couple of years, they've been able to buy down rates. As you say, they've been living in a sub 6% mortgage environment, right? They've been able to do that. So they've been able to do really well on during this time, but that started to change a couple months ago and things were slowing down. They had a lot more inventory. So what do you see right now?
So before 2025 started, we wrote that article December 23rd in 2024. We said the builders are going to have a supply and demand problem because their completed units for sale were picking up. And historically, that's the data line that really matters. Not a lot of people, again, know this about the builders. The builders have stages when they do their reports into the census. They have homes that are completed for sale, homes that are in construction, and homes that they haven't started. Right. So the business model is different than what people projected. And back in 2022, when we had over 10 months of supply and there was all these cancellations, it looked very negative for the builders, but new home sales were at such a low level. Builders' profit margins were still healthy. If the 10-year yield goes down and rates improve, they could sell these homes. The demand is there. Well, back in 2022, November 9th, if anybody want to go back and look at the builder stocks on November 9th, that was a real noticeable bottom and builder stocks just took off, right? As rates were heading down towards 6%, the big publicly traded builders did whatever they needed to do to sell homes, but also the smaller builders felt better about business. New home sales grew and then rates went up. And then we do this back and forth game with the builders, and you can see it in the builders' confidence. Whenever they get rates go down, their confidence picks up. They believe they could sell more product. Traffic picks up, sales pick up. So all these things just move around the 10-year yield. Well, this year, just like the existing home sales market, mortgage spreads are better this year than they were in 2023 and in 2024. So now that we're heading toward, if we can just get towards 6%, the builders have also shown us their data gets better, whether it's big, medium, or small builders. And then, they can get some sales done. They've got enough completed units for sale and homes that are under construction or homes that haven't even started construction yet. So they are in that category that they've got the supply there. They just need the demand to start winding that stuff down. And why is that important? Because the builders, when we look at economic cycles, residential construction workers, they typically fade. Residential construction workers are fading, but like in 2023, they faded for 4 months back then too, 4 straight months. It was a bigger decline in the labor pool back then than it is now, but then rates went lower. So I know it's confusing because there's all these negative headlines, but if the 10-year yield had gone up to, let's say if the 10-year yield was at 5%, and mortgage spreads were bad and rates are at 7.75%, we are not having this discussion. But because the builder stocks are so oversold and they were basically pricing in a very high mortgage rate market, they have the ability to flow back up when the 10-year yield goes low. You just kind of keep it simple at that. Ebbs and flows, waves and channels, money flow, how things work, how builders and traders operate. But it does make economic sense because we've seen it twice before. Now, last year, toward the end of the year, the builders' confidence was picking up when rates were going up higher. They were assuming, mortgage rates would be lower, regulations would be lower. There's no tariff on anything out there. And then went into 2025 with a lot of enthusiasm, and rates stayed elevated. Yeah, tariffs here, so things change, and even the builders, I think they were the first trade association that asked for, let's not put tariffs on lumber. And So now it's a little bit different. Again, when rates go down, things just feel a lot better. When you got really cranky old men at the Federal Reserve who are saying, oh my, if people start buying homes again, what are we going to do? The worst are these degrowther people that sit there and go, home sales have to crash. We have to destroy the economy to bring inflation down. So there literally are some people that are just born into some crazy bondage that they can't get out of. And the degrowthers are always these major deflationary people that are just lost it as a child and did it all the way until their dying days. But think about this. 6% mortgage rates is not loose policy compared to what we saw in the previous decade. Oddly enough, mortgage rates were 3.25% to 5%. The builders had the weakest new home sales cycle ever recorded in history. That was my big macro call last year. But now household formation, wages, incomes, these things are a little bit different now. The builders aren't really operating from very high levels of sales. And if you look at their home sales data from 2018 up to 2025, if you take the COVID burst in sales for that one shot, and then the low level in 2022, the sales have remarkably stayed in a range for a very, very long time. So when sales are low, and a 10-year yield drops, you could understand why some of the builder stocks are performing better. Now we're going to have a builder's confidence coming out in the week next week. I think it's on Monday. That might be a little bit too early to capture this last move in rates. But if rates go towards 6% and stay there, the builder confidence should pick up. Their traffic should pick up. Their sales should pick up. That's what's happened before. And that survey is tilted towards smaller builders. The big publicly traded builders can pull some more levers. Why, Sarah? Because the builders are efficient sellers, because they are not the
March of Dimes.
They are not the March of Dimes. They're not a charity. They're here to make money. And we still have this crazy concept that, the builders, I think it was a New York Times reporter that said, even though sales are down, the builders should still buy homes. I'm like, homie, you've never ran a business in your life. Oh, yeah. No, that's not how it works, So another interesting nugget into this second half of 2025 for housing.
So I think they've shown remarkable resiliency when you consider the tariffs, which have been, hard to track, hard to know what's coming, hard to know how to plan for that, like what's going to be actually assessed, what's going to be pushed out for another 3 months. There's that. And then there's also a pretty significant amount of people being, arrested, like for immigration purposes at places like Home Depot or at construction sites. So, I know locally here, I was reading a story about a builder who was like, his crews don't show up because they don't want to get arrested. I'm not sure that builders always pick up people from Home Depot. They usually have very skilled people who worked for them on different things. But I think that the resiliency of the builders is pretty amazing.
Well, one thing that they talked about this year, about 7% of what goes into a new homes is brought in from overseas or another country. So it isn't a significant amount. And from all the earnings calls and what people are talking about, they haven't had much tariff cost pushover yet. And also because home sales aren't booming, they have plenty of labor to do what they need to do. So it's one of these things. If new home sales were running at 1.3 million and housing starts were at 2.5 million, that might be a different subject, but that's not the case this year. So resilience, part of it is, they haven't had the cost push inflation yet. They've been able to manage that. And also because new home sales are at, they're not booming in any sense or manner. They haven't had quite the labor issues that many people thought in scale terms out there. So if rates go down and they could sell product, it'll be interesting to see when do you actually finally see single family permits start to pick up again. We saw that toward the end of 2022 when rates got down to 6%. Then we saw single family permits take off, and that hasn't been the case for some time now. So there's going to have to be a supply and demand equilibrium. And it's a lot more difficult now for the builders because the completed units of sale are at historical levels that typically usually is at the end of the cycle. But if we can get down to 6% again, see, it's just such a shame that we're holding things back for 1% of rates. That's what's like the kicker here. It's not like the market is saying 3, 4, 5% rates. But just getting down towards 6 could alleviate some of the concerns, not just by the general public that want to sell or buy homes, but also on the economic side, that you're not going to need the builders to start laying off people. Now, the specialty trade construction labor has already been rolling over for some time, but even Home Depot and Lowe's are acting better. Again, rates go lower. What's the sector that gets impacted the most? Housing. Keep it simple like that. But it does explain the builder's confidence data and how the cycle is a very unique cycle. Sarah, I cannot express to you how unique this economic cycle has been for housing. Just, the COVID-19 recovery, the savagely unhealthy housing markets, everybody who's in that, the builder cycle's over, but, the corporate profits are there's so many different variables. You got to be able to capture it. But there is kind of like a shock and awe. I know even Mike Simonson and Dustin, who's a lumber economist, all these people are like, hey, what's going on? Let's ask Logan. And you know me, I'm going to get a video out right away. Because I'm not afraid of being on the camera, and I'll give a video trying to explain the 10-year yield and show charts of 10-year yields and Toll Brothers and, what's going on here. But with housing, you kind of keep it simple. 10-year yield goes down, mortgage rates go down. That's the slow dance that we've been talking about since 1971. And then, the spreads are getting better. So the slow dance, Sarah, the slow dance is more intimate. See, don't you like it more intimate slow dance where people, slow dancing that way instead of the, Napoleon Dynamite slow dance where they're like 10 feet apart from each other. That's where bad spreads. That was 2023. Terrible spreads. Slow dances fall apart. Not the way we want to slow dance here in America.
Listen, it all depends on who your partner is. So if it's Napoleon Dynamite, you want it to be, arm's length. So you got to pick a good partner.
Did you just throw shade on Napoleon Dynamite after his dance moves he had on that movie?
That's such a great movie. Okay, so I had a question for you because we've talked about, especially when it comes to inventory, when you're looking at the housing market at the existing home sales, you're like, this looks about right to me. It's not, we are down, but the housing market has become more healthy in 2025. When you look at the new home sales market, what level do you look at for months of supply and stuff like that? That to you means like we are at a good spot for new home sales.
So I had a rule of thumb always in the previous decade. I say the builders get in trouble when monthly supply is above 6.5 months. But what happened in this cycle, which was very unique, monthly supply spiked to 10 months, but the total completed units for sale were still very low because we had so many homes that were under construction or hasn't started yet. It pushed out the monthly supply data much larger than you would normally see. Now, for the builders, just on the business model side, their supply is too much. Right, where the existing home sales market, the way you get a housing recovery going is that affordability has to get better. So let me give you guys all a really good example of this. Moody's came out with a home price index valuation, and I think it was 2022. When things were very crazy, home prices were 29% overvalued nationally. Well, that is now down to 8%. Why? Higher rates. Who is team higher rates? February of 2021. Boy, the tomatoes being thrown at me at that time. Oh my God, what are you doing? You're just like no, it's about to get really bad right now. Prices are going to escalate. Well, part of the concept of team higher rates was not only do you get inventory to grow and you get price growth to cool down, but you also put the home builders on their ass, pardon my language, and they make deals. Right? Because monthly supply was high and their total units were, they didn't want that to build up. So they were making deals, giving people low rates, moving product. Well, that worked for a few years, but now their total completed units of sale are back to levels historically that usually are peak of housing cycles. And It's one of the charts that not a lot of people know about. That's completed units of sale, but going back to the 1960s, and then we see it that way. You're like, okay, now you can kind of understand why the builders pull back, because they are not going to put their heads down and start building in this environment or issuing permits. So they got to wind that total completed units, wind that monthly supply. You get monthly supply back down below 6.5 months, and you get the total completed units going lower. Builders will get more confident. They'll start issuing permits. They'll finish up those projects. They'll sell new homes. It's not like we have like very high cancellation rates in the last year. And the crazy thing, Sarah, is that the builders' purchase application data earlier in the year had a post-COVID high. And, one of the monthly prints were kind of in the upper end range. So it's a funky sector. But if you're asking me when, I think 6.5 months of monthly supply, when he goes under that, the builders feel confident they can move stuff. When he goes above that and the completed units go up with it, the builders go, whoa, hey, shut the permits down, shut the permits, housing starts down. No. We don't want to destroy our margins. So that's kind of how they operate. And that's how we came up with they are not the March of Dimes talking point.
It's the one, when you talk to someone who's not in housing, it's the first thing they say, well, we just need to build more homes. It's always, it seems like an easy solution.
Sarah, it's never going to happen.
I know.
It's never, let me tell everybody, everyone is blowing smoke. Y'all are crazy. When do we ever oversupply a marketplace in this country? The only oversupplied period we had was because of a housing credit boom and credit bust and distressed sellers and anything out there. The system is not designed for deflation. This deflation is bad. Deflation, profits go down. You can't sell stuff. You have less people working. That's why deflation is worse than inflation. So people keep on saying this. I mean, I'm going to die with people keep on saying, oh, we just need to build more homes. We're just going to sit down and say, no, you're not. There's a certain equilibrium. Unless you want the government to finance this stuff and lose money on it. There you go. We wrote that article June 2021. We said, everyone's like, you're going to build a lot of homes. Like, no, you're not. Wait till rates rise. It's all going to go today. And then we're going to come back and read this article I'm going to write in June of 2021. And I'm saying, I told you so, because they need to make money on this stuff. Like, can you in theory build enough apartments? Like, really, you could build massive. You could buy 3 to 4 million more apartments, and get rent deflation. But who's going to do it? You got to be able to make money on this stuff. So find a way for everybody to work together where you could loosen the regulations, get the financing going, because financing is a really big deal, especially for builders, especially for apartment builders. A lot of regulations changed in the 80s, where it's less incentives. Find a way to everybody work together on this and build. But if they can't make money on it, it's very difficult to ask people to start building. But a flooding of supply or people wanting deflation, right? In that regard, it's not. And you can see what happened. We had a really good run in the 5-unit construction when single family permits were falling in 2022. 5 units were going up positive, and then rates went up too much, and then that thing has collapsed to recession levels out there. So I've heard people say we're just going to build more homes, and I just smile. I go, you're all cute, just adorable little kids. I love you all, but there's just that supply and demand equilibrium. Unless you get the government who says, okay, guys, put your head down and build as much as you can. We want deflation. We want rents to go down in a significant way. And don't worry, we'll take the loss on you guys. Just build and make. So it's one of those things. There has to be that equilibrium. And this is why if you look at housing starts and new home sales and all these things, they all move together, right? Because they don't oversupply a marketplace, and it has to make sense for them.
It does. Well, we are out of time. Thank you so much, Logan, for weighing in on these very important things, especially the builders. Great episode.
Pleasure's all mine.